All right, good morning, everyone. It's Trader Rob. Today is, what is today? Tuesday, December 16th. Sorry, I had an absolute shit show this morning. My recording streaming software, I got a message yesterday to update it with some hot fixes for some, I don't know, some crashes that I was having. I said, remind me later, and today crashed on me like 5 times until I was able to figure out going into safe mode and doing the update, and seems to be working okay now. So sorry for the late start here this morning. I wanted to start at 8 a.m. But we had a good amount of news this morning, had a pump up, and then we just pretty much retraced that same move to the downside. And we've got PMI services and manufacturing at 8:45 a.m. Central Time here this morning. So we'll make sure to keep an eye out on that one. Okay, so unemployment rate came in just a little bit higher than expected, which again, I know is negative for people that are on unemployment, but does help with the inflation rates scenario. U.S. non-farm payrolls, though, was up, came in higher than expected. So again, kind of a contradicting report here this morning. And again, so we got S&P services and manufacturing PMI at 8:45 a.m. I am trading the March contract. I did the switch over yesterday. And one thing that I, probably should wait till after 8:30. I might just repeat myself. But, typically that week with rollovers is, especially for volume-based traders, we need to start to see some decent price action prior to making some decent moves out of areas for some unbalanced volume, which is the basis for my setups. And when we have an overlap of contracts like we do, obviously Friday, yesterday, today, tomorrow, it gets a little wonky because now we're looking at volume for March, and it's still trying to incorporate volume from December. So typically I reset my signals during that time and pretty much kind of have to start from scratch. So it might take a few days for setups to appear. If you've noticed, that is why I have the change in the volume profile. So this is now my 45-day volume profile up here, and then this is now my daily volume profile here, just so I can kind of capture to see how the March contract's volume is actually playing out for the day. I still will use this area for general guidelines, but I will rely a lot more on the one-day volume profile, probably for the next week or two, until we start getting settled into the March contract. So that's why you see the change on the screen. I'm hoping that when the label lines come up here on the volume profile, that we'll still be able to see them. If I need to make an adjustment there, I can. Michael, good morning. Cad, good morning. Starscream, good morning. Keith, good morning. All right, we do have some areas here that I want to take a look at. We'll start off with the ES. Let's jump down to like the 5. Okay. There's a pocket down here. Looks like it kind of got swept. Did get swept right here. I'd like to see off of my level, which would pretty much sit right around here at the 68.38 or maybe 39. This is where my 5-minute level would be at. I'd prefer not to see this type of retracement back into this area, just because this is kind of sucking out the volume for the next move up. I like to see a big move up, then it can retrace down here and then kind of come back into this big unbalanced area of volume. But with that being said, let me see. Yeah, so the area that they left is here. But as you can see, this candle right here kind of redid the fuel here, because this is where my 5-minute level would be sitting at. First off, it would be sitting right here. Okay. That would be my 5-minute level there. And then my other 5-minute level would have been right here. But as you can see, as price action moved to the upside, it swept back into that same level for the fuel that it needed to break of structure and to make its move to the upside. So not a high probability setup. I am going to leave the smaller shaded box here just to, I could delete this guy. Just to see how the reaction is at that point, because I also, as we start moving on with price action, I want to see how it reacts to zones or levels that I find that I know always get a very good reaction, but now we've got this kind of mixed volume signals in the market, and I want to see how they start to kind of get what the reaction is. So you'll see me doing this now often, probably for the next couple of days, where I leave these little zones, kind of untested zones. Well, this one is tested, but still want to see what kind of reaction we get here. And just so you guys understand that this is not necessarily an area that I'm looking to take a setup. I did take a trade yesterday after a stream. It was an area that I had done just like this, that I had left on the charts on the NQ. It did tap in. I saw a nice footprint confirmation, and I was able to take a short for 20 points. So I had an 8-point stop and a 20-point take profit on that. So that was a really nice trade for myself. But again, not something yet that I would put into the signal service yet, because of the fact that I want to see these areas continue to get respected and see the push from volume. And then otherwise, we have another area that's down here. So I can kind of take out this bigger area where this 5-minute level originates from. Okay. But this, to me here, if we break through this 5-minute level right here, that doesn't have the greatest volume. I could definitely see this being very sweepy here. So I could see this coming in and sweeping this low before any type of reaction. So I'm going to leave this one again on my chart, just so I can kind of start to see the areas that that I see and how they start to kind of react to them. Before I start looking at anything up here, I would again want to see pretty much a pretty big break of structure. At least I would say down to the 68.46, so somewhere like down here. So breaking through this unbalanced area right here, that's when I would start to kind of look maybe for something over here, even though this is all news related. So this was the non-farm payroll, unemployment data, and I don't put a lot of weight into the reactionary moves to the up or the downside, just strictly from news. So a lot of that's very impulsive and not necessarily very smooth, like what I am looking for. Again, to the upside on the ES, I have another 2 areas. Let's see if I can kind of maybe shrink this volume profile a little bit, because I feel like it's a little intrusive on my chart. I've got 2 zones up here on the ES, and those would originate from, let's see, right here. So we've got an area here that's at a 5-minute level, which would have sat right here. Obviously very strong impulsive move. This, I believe, was right at the market open. So again, I don't put a lot of weight into that area. And then if I jump down to the 15, let's see what we got. I don't know. I think it might fall in. Yeah, I think the 5 and the 15 minute kind of correlate with themselves. So this area kind of got retested. If I jump down to the 1, I definitely got to shrink this volume profile. And it's pretty intrusive on the chart. So here on the 1 minute, we've got a 1 minute level. Obviously, that would be sitting right there. This would be more of a TP level for me, from an origination from here. But as you can see, what did we have to do? We saw this candle swipe the volume before the move down. So again, I'm not interested in this unbalanced, or I should say, pocket of volume, because in my eyes, this has already been balanced out. And as you can see on the volume profile, the higher time frame one, the 45-day composite, it does correlate with a big area of volume, which is why you get that reaction. It needs that fuel. What I'm looking for on my moves are moves that it had the fuel from the original destination, and it had enough fuel to break structure on whatever time frame it is that I'm looking for, and coincide with an area of high volume. And that's kind of how I originate my trade plan. So again, the ES, this is an area that I'm just looking at right now. I just want to see what we kind of do in that spot. And then if I switch over to the NQ, again, same scenario. My left-hand side of the volume profile is the daily. The right-hand side of the profile is going to be the 45-day. And again, for those that are just joining, the reason why I have two profiles up here is that as we have the contract rollover, the volume data gets a little skewed between the two contracts between December and March. And what I always do during probably the first week and a half of rollover is I will put the 45-day as a general guide as to where there was obviously big pockets of volume. And then I will also throw up the daily volume profile that now incorporates the the March contract much clearer. So if I start to get kind of a confluence between the two volume profiles, it gives me a little bit more confidence in this new updated volume market that we're in. So that's why you see two different volume profiles on my screen. And then for some areas that I would be looking at, if I jump down to the 5 minute, I have an area right here that we're probably going to be revisiting. Again, big on the 45-day volume profile, not so much yet on the 1 day. This is yesterday. I think we had a pretty strong move to the downside in the evening that I was watching the charts. It's actually a pretty impressive move to the downside for such an after hours move. So again, my pocket of volume here now would be sitting right there, which coincides nicely on the 45-day, and another pocket right there. And I'm going to be honest with you guys. You got to stay patient. I know these last 2 weeks have been rough. It really has been. And now with all the reset of the signals, it's kind of like I'm starting with a new canvas here. So it's going to take a few days to kind of get. What was I trying to do here? Oh, let me take this guy As you can see, volume came in, tapped into this higher node on the 45-day, made a nice move to the upside. Not necessarily where I would expected the reaction. I thought that they would probably want to tap into there, but that's about 5 points off from my highlighted area there on the screen. And again, all of these things that I'm doing now is really just a reconfirmation of what I'm seeing on the charts. And I want to see areas continue to get respected. All right, so again, this is a big area of volume right here on the daily, and starting off on the 45-day. My only issue here is that I don't really have much. You know, that's a pocket right there. That's pretty much it that I see there. They've pretty much balanced the shit out of that area. So now, again, I'm just trying to see what reaction we have once we tap into this area right here. I'll jump down to the 1 minute so we can maybe see it a little bit more clear. There we go. And then we kind of see what kind of reaction we get at this area right here. Not something that's tradable yet for me. High impact news in about 13 minutes here with S&P Manufacturing and Services PMI. Good job, Michael. Michael just passed an Apex eval with the YOLO at opening on the NQ. At $20, it's worth the gamble. Yeah. It is the last day today for Apex's 90% off sale. So those any size eval is going to cost you $19.60, $19.70. Did finally pass the threshold on my Take Profit Pro funded account. So I'm in that zone now where I really have no drawdown minus my opening equity on there. And I could start to take daily payouts, which is nice. I did not trade that that pro account for about 2 weeks. Yesterday, put it back into my trade copier and took an $800 win on that. Took an $800 win on the Apex PA accounts. One contract on my cash accounts for both of them, but I went with 20 points of take profit and 8 points of stop on that trade that I took, which hit, I think I was in that trade for less than like 15-20 seconds. And again, it was not, I did not have my take profits and my stop losses marked out. It was literally the zones of unbalanced volume that I find every day constantly. And now, as you guys see it, as I've explained a few times on stream, I now want to see how these start getting respected with the new December contract. I want to see how, for me, this seems like a good setup right here based on the volume profile of the daily only. So the daily's on the left-hand side, but this would fit exactly what I'm looking for. Coming into a good amount of volume. Granted, I probably want to see this stretched out just a bit to get a little bit more defense, maybe right there. It's probably all you would need. And then free flowing down to my take profit areas. On the 45-day composite, it's a little bit of a mixed story because now, yes, we could see a reaction coming into this high volume node, but I would probably want to see, again, this maybe shift it up a little bit. That's why I have both of the profiles up right now. That kind of gives me, this one gives me a clear picture of December. This one gives me a clear picture, I'm sorry, a clear picture of March on the left, a clear picture of the last 3 months. I'm sorry, the last month and a half on the right-hand side. So we'll see what kind of reaction we get here. Again, not tradable for me yet, but again, I just want to kind of see how the footprint reacts. See, so not much respection there on the level. As I stated, I thought that this needs to come up just a little bit. We did get a reaction point right there. So that would have been closer to the reaction point that I would have normally been looking for on my trade. And that just kind of comes to show you that we need to give this a little bit of time here. We need to stay patient in the markets to kind of have this all kind of flow in a rhythm again, once again. So that was where the reactionary point came in. Still within that first 10 minutes of the market open too, so I'm not necessarily finger on the trigger anyways during this time period. So I like to let the market do kind of what it wants to do. And then another thing is, obviously, we got news coming up in about 7 minutes here. Morning, Chump Sauce. Morning, David, Ray. Greg, good morning. Steve, good morning. Coach Cleats, good morning. I think I got everybody else on there. Take this guy out. Okay, so now they left another small pocket right here. They did kind of swipe at it right here. So again, I'm just trying to map out my areas where I would typically see some reaction to it, which would be right there. Not strong, but that would be the area right there. Let's see what happens here. So reaction to where my TP would probably been at. Now I want to see a reaction here. Evening, Anthony. Man, I just me and my wife, we watched about like an hour and a half video on Dubai. Some guy, the guy I follow for food and restaurants, he did like an hour commentary in Dubai for like the food scene. It's beautiful, man. It's kind of incredible what they've done there in such a short period of time. All right, so that's what I like to see right there. That's what I like to see. Granted, it was maybe a tick off from where, but you know, now we're splitting hairs. This is the reaction that I like to see, right, with like zero drawdown. And that's kind of what I want to see more of. I want to see that happen more frequently. My next area right after that I would be looking for It's going to be sitting right here. Again, doesn't fit very nicely on the 45-day. But as you can see, you've got a nice little bump out over here on the volume profile for the daily. So in this scenario where I would be looking for a reaction, would be actually right around here. So we'll see what happens at this next one. We got the reaction there that I was looking for. Now let's see what happens when we get into this pocket right here. And then we can start to look at what it just left. What it just left right up here. I guess go to the main, so this makes it easier to you guys to see. So here we go. We got to break a structure. Unfortunately, my area would have been right here, but you can see the swipe, right? Like if this candle would have been a straight down candle with no wick, this would have been a fantastic area. Well, on the daily, not so well, but on the 45-day, you know, would be an area that I would definitely be interested in. But as you can see, the price action swiped at it before it made the move to the break of structure. So in my eyes, how I view this is that it rebalanced fuel to make that move. This origination didn't have the fuel to break structure, and it needed to retap into it. And that retap is where that lowers the probability of me getting a very little zero drawdown type of trade. So now I'm curious to see what we do right here. Okay, so they just balanced out volume. Now they've got the 60s that they've left. I couldn't even draw that quick enough, so that they just balanced out. So now, if they make a straight move down to here, the 57s is what they've left. Let's see if they retap. And it's the same thing for the downside. If the market needs fuel, it'll go to these areas of unbalanced volume just to pick up the fuel that it needs to make the move. It's the same thing in reverse. And if this was a setup, I would want them to tap into my area first, then have this area here that they could dump off to, which they just cleared this unbalanced volume area off. So I can delete that. Now this to me becomes a lower probability setup. Unless from the move from here to here, they leave something unbalanced, which right now is the 52s. So I'll mark this off, 52. Oh, see, there you go. You see that? So you see how it tapped right into the zone. They left the 52s unbalanced. That's exactly where they went right off of the reaction point here. So what you're learning right here, guys, is pure gold. It's pure sauce right here. And I feel like I've got the time right now to kind of go over this in detail. So that's what I'm like. That's what I want to see. I want to start building confidence in how I see unbalanced volume by drawing out these levels. Now, again, what did I say about this area right here? This one to me is a lower probability setup. One on the daily, which typically I don't put much weight to at all, but I have to respect the daily now because this is the new March contract. On the 45-day composite, we are starting to start seeing the profile extend out to the left a little bit, but again, not very, not necessarily a pocket that I would be super interested in. If it was a little bit higher, I would say that's great. So this, you know, brings it down to like, let's say a B setup. The fact that we swiped the unbalanced volume before the move brings this down to a B minus C setup. So these are not A plus setups that I'm, looking at right here. But again, it's more about wanting to see the reactionary points in the market. And here we're going to be heading into another one on the NQ. And then as we get price action dropping, we just had news being released. So with news, obviously you can get some unpredictable moves, but let's see what, so right now they left the 23s unbalanced, which is right there. I mean, I can't even say it fast enough before, but you guys saw as price action was down here, the 23s I put in that were just unbalanced. Now that reaction happened about 5 ticks away from where my original thesis was at. So not on the dot, not super sniper entry yet there. But things are starting to look a little bit more how I see the market each and every day. And that's what I'm really looking for the next couple of days. It's pretty ugly there. As you can see, there was really not much there that it could even do. So now we'll take a look at this area. And I'll let you guys know right now they've left the 95s. They just tapped into the 95s, so that's balanced. Now, I might not get the reaction here just because of the fact that I've already stated. Okay, so they left the 305s. So the 305s are right here. That's an area that they can balance out off that move. We might not get the reaction here because of the fact that I've already stated that this is more like a C setup. But if the market was behaving correctly, they would want to come right after this, close out their auction very quickly. There you go. You saw that swipe down? I don't know if you guys saw that, but hopefully you guys saw that swipe right back down to the 305s. And this is how I find my TPs every single day. So that right there, that move would have been my 15-point normal setup on the NQ. Granted, a little bit more drawdown that I would have liked to see, but this region right here is probably 8 points, I would say. Let's see. Yeah, 9 points. So, which is again within that stop loss area that I'm typically needing. But hopefully in the chat you guys saw that reaction. Price action came all the way down here to like the 301s. We could delete that. Sorry, let's delete this guy, and we just keep doing this. Our next area that they left is right here. Maybe want to see a little bit more break of structure. But that is our spot right there. And it broke structure right here. Again, I would like to see it break structure up here. That would give me a little bit more conviction. And then now I can just kind of draw out my areas where I want to see a reaction. This is a shit area. Yeah, this whole area here is garbage. So this all got balanced out prior to. So I don't even need to look at that area anymore. Let's see what else we could see. Not much. Okay, ES. So ES, again, I had an area marked off right here. I wanted to see a reaction. As you guys can see, you're going to say, well, Rob, it blew through it. No, it didn't. Look right here at your initial reaction point. This is what you call zero drawdown. When you learn how to do this, this is how you can get to these zero drawdown trades. And that reactionary point, granted, I was not looking at the ES, so I wasn't able to map out any TP areas, but that movement right there, which was even after news, this was, oh no, this is right prior to news. This was a minute before news. Had a reaction point. Let's just bring it to this one right here. 5.5 points. And you actually would have gotten more because this would not have stopped you out yet, because my stop loss would have been right down here, right around the 47s. Now I don't know how to take off this stupid, usually the ruler. There we go. Again, this is just re-emphasizing what I am looking for in the market. And this is exactly what I am trying to now find out in the March contract to start to make sure that my areas are still getting respected, which they are getting much more respected today than they were yesterday for sure, just based on how I was looking at price action. And delete this guy. And then now for me to get interested in this area right here, what do we need to see? I need to see a break of structure, and I would want to see a break of structure pretty much up here. Okay, up here. Because now I know that that the move had some fuel to not need to get rebalanced, which as of right now, as you guys can see on the candles, nothing rebalanced this area right here, which is the area that I would be looking for to be taking a trade on. Granted, there's other confluences that I would need. I would need the volume profile to look favorable, which here it does not. The daily profile on my left also does not. So, you know, there's things that invalidate things, but, you know, the first step is finding the levels and finding the areas of unbalanced volume. That is step number uno. Okay, so here's I'm going to give you a little inside tip. And all of this is going to be covered very extensively in my masterclass. But for those of you finding a hard time with levels, here's a pro tip. Easy one for you guys. Let me go to chart style. Let's go to line on close. If you're having a hard time finding areas that that are areas of unbalanced volume, just put a line chart on your, forget to even look at the candlesticks, forget the noise. Okay. Right here, I can tell you we had an area, a break of structure. That's the simplest part to finding the unbalanced volume. Now you just got to find a 5 or 15 minute level that coincides with this area. Okay. We had a break of structure right here. Maybe not as clean on this line, but I mean, that's a major break of structure right there. And use the line chart to find your areas of unbalanced volume. And then you can switch over to your 5 minute chart and see what, oh, sorry. I got to go back to candlesticks right here. Let's see if I can find that circle. Okay. So that circle would have originated from here. Not much there, right? Because of the fact that my 5 minute level would have been right here, okay, at the 68.56. This area of unbroken structure is pretty much at the 50s. So not the absolute greatest, but as you guys can see, this is terrible on the volume profile anyways. So this would be invalidated on the volume profile with the setup down here. Now, if the volume profile fits really nicely on this 5 minute level right here, and I know I have an area of unbalanced volume, that's the area that I'm looking to take a trade on. And if I go to the 15 minute, we'll see what story this will tell us. Okay, so this now gets a little bit interesting here, doesn't it? Because now you've got a level right here on the 15 minute. Does that coincide nicely with this area of break of structure and unbalanced volume? Sure as shit does. Does it fit nicely on the volume profile? No, it does not. So even though we can get a reaction point here, I'm looking for as many pieces of confluence. And let's just say you take off the volume profile completely. You go in blind. At the very minimum, what I would want to see at the 6850 would be I would want to look onto level 2, which, let me bring it up. I'm really going through some secret sauce here today. Book map. Give me 1 second, let this load. All right, so now we got bookmap up, and let's just say the volume profile, you don't even have it up, okay? And we want to get a confirmation. What I would look at is at the 6850. Now, if I look at the bookmap at the 6850, I don't have this. Is not the right. This should be ESH. Sorry, I have this on my screen, on my monitor on the top side updated, but I don't open this bookmap up too much because it gets very confusing on, okay, I can unsubscribe to that. So let's go back to the 6850. What I would want to see at the 6850 is I would want to see orders stacking up here, okay? Right here at the 6850, I want to see orders stacking up here, and I want to see some orders stacking up between my stop loss and my entry. So as of right now, is this an area of big interest to me? No, I don't really see much here. You know, 35 is pretty much below, I would say maybe the lowest area right now of volume that's sitting right there. So that's a secondary confirmation. And then ultimately my last confirmation is my footprint chart. And that's what would give me the confidence on the entry. So those are all of the, those are the steps that I would take as I'm looking at this. But one cheat code that you can definitely use is going to be switching over to the line, which now I'm on the 15-minute. So now, you know, now our areas, and this is what I would do on the 5 and I would do this on the 5 and the 15-minute, guys. I gave you the example of this one here on the 1 minute, just because that's what I had open on the chart. But this now would be an area. So now you're starting to see different points of confluence right at that area. The 6856 now fits nicely with the 15-minute level, fits nicely with an area of break of structure. We know we should have some unbalanced volume here. So now we go back, we look at the candlestick, and yes, we'd on the higher time frame, 15-minute, we didn't really have any swipes of this area right here. If I look at bookmap, I come back and I say, okay, now what is the 6857 doing? Okay, now we're starting to get a little bit closer to where the market's got some interest. The 60s have got 71 contracts resting there. 57s have 47 contracts. As we start coming down here, I would want to see the 6856 start to get filled up. And I would want to see this start to get orange. Blue, remember on bookmap, it goes from lighter to darker is your high areas of liquidity. So I should say resting orders. And then once we tap in, obviously we probably will start off with a big red bubble, and then you want to see the green bubbles coming in. So that means that the market participants are coming in strong at that level that we've marked off. And I personally see that with my footprint confirmation. That is what gives me a very quick, I have a very hard time just looking at the bubbles because those can get very noisy. Not to say that the footprint confirmations can't get a little noisy as well, but they're, for me, easier to view because I'm looking at a very simple set of rules with delta, kind of looking for that delta flip on my footprint candles for my confirmations. So, Michael, I don't know if that, I should say for everybody on the chat, hopefully this 30-minute kind of breakdown here helps out, but that's what I'm looking at every single day. I'm not even sure what, oh, that was just identifying break of structure. So let's get back to the NQ. Let's take a look here now at some areas, which we got right there. Doesn't fit very nicely on the daily profile. Does fit somewhat okay on the 45. So now I would like to see on the lower time frame to see an area where I could possibly spot some reaction points. Not the cleanest, so this already did have a swipe. Did have a swipe at this unbalanced volume area, but again, I want to see now as we get down there what kind of reactionary point I get here. This would be, to me, probably a B setup here. And then with TPs, TPs are pretty simple. TP1 or maybe even TP2 would sit right here. Right now, this can change obviously, but right now the 25,395, they've left this unbalanced, right? But it's really not going to get unbalanced until we get a break of structure, which is really not going to occur till after this zone here. So again, and that's why I was saying this has already been swiped, so it's a little bit harder to find my TPs. It's just not a clean setup. This is not an A+ setup that I'm looking at. But based on price action as we get down there, if you start jumping down on the NQ, you have to be on the 15-second, 20-second to find your TPs. But right now, they left the 52s. So the 52s, which is right here, very small, I understand that, but this is exactly what they just left. After that, they left the 368s, which would be right here. Again, we might not get the reactionary point here that I normally would like to see, just because of all of the things that I told you on why this would not be an A+ setup for me. Again, this is, I already said they swiped. Before the move up, they had to swipe volume before they had this fuel here. So even though we're not seeing the reaction, I could tell you, well, they might have already cleared out TP1, but TP2, and again, I should have probably brought a book map. I'll try to do that on the next example. But this right here is left unbalanced. The market's going to want to tap into that at some point. I mean, can't tell you it right now because I don't have a good reactionary point yet mapped out, but this is an area that they are definitely going to want to swipe at, and possibly a little bit of the 52s. And again, for confirmation on this level, I told you it did not fit very nicely on the volume profile. It did not fit very nicely as prior to the move. Some of this was chopped up. Some of this volume was already chopped up. There you go. So they swiped the 52s. Now they'll come after the 67s. So they tapped right into the 67s. And now they've completed this unbalanced volume area. And this is what I sit here doing all day long. And what I'm trying to do, and what I've had, honestly, a pretty difficult part about, the last couple of weeks, when we start getting stuck in a range, which pretty much occurred for about 12 days of the market, pretty much that starting from that last week of November, when we get into these very tight ranges on the NQ and the ES, specifically the ES. The ES was almost untradeable for me for 2 weeks. And it becomes very difficult to find areas without movement. Because without movement, we're just recycling the same volume. And the unbalanced areas become so thin and so tight that it makes trading opportunities a lot tougher. So that's why we haven't seen that many signals. We've seen a lot more signals in December that did not get respected. And then now on top of that, we've got the issue of the contract rollover, which is kind of skewing the volume a little bit, which again, for those joining me, hopefully you guys didn't miss, and I didn't record this, but you guys can watch this again. I'm afraid to hit the record button with all the issues I was having earlier. But where was I going with that? For those that are just joining me, the reason why I have two volume profiles on here is now I've got my 45-day composite volume profile on the right. So that's incorporating December and March kind of intermixed. So this is kind of giving me a guideline as to what volume is doing on the bigger scale. And then I have the daily here that's going to help me out tremendously on the March contract. And I'll probably have this on my chart for about a week and a half is all you really need. After that, you can then switch right back to the 45-day profile. And start to get some really nice confirmations on your setups. So if that 45-minute conversation there helped, typed yes, it helped in the chat, and please leave a like on the stream. I'm trying to give as much knowledge as possible without simply just the lines on the chart to take a trade from. You know, I want you guys to be able to use this on any market, gold, the YM, the RTY, whatever it is that you're trading. Equities. This works fantastic on the equities actually too. I shouldn't say actually, because that doesn't surprise me, but awesome. Good to hear. All right. If you guys let me, I'm going to refill my coffee. I'm at the bottom and it's a little cold, so I'll be right back, guys. All right, everybody, I'm back. I'm fueled up. Just like the market needs fuel, so do I. All right, so we got another area that was left right here. Okay. How does this fit on the volume profile? Fits nicely on the daily, depending on where we can see some unbalanced. Fits okay somewhat on the 45-day. But if I put a little bit more weight on the daily just for the new contract, it does fit nicely on the volume profile. This is a very classic example of what I'm looking for on the volume profile. And my area of interest, unfortunately, was swiped right here. And let's see. Left a little bit, just left a little meat on the bone here for a move. I could take this bigger one out. Not the greatest on the volume profile. So again, these things, this what kind of validate what a B- setup for me would look like. And then let's bring up the book map. Subscribe. Get rid of this guy. Let's bring him over here. Let's throw him on the chart. Okay, so what's the area that we had? Let's see what area we had mapped out here. Yeah, see, this is my 5-minute level. This is what the whole thing is what I had shaded out, correct? This is my 5-minute level right here. What happens before the move to the downside, which we did get a break of structure. If we look on the line chart, you'll see a break of structure right here. But we balanced this all out. So again, you know, just not a high probability setup anymore. And that's how I can see what areas have been kind of balanced out. And then secondly, from there, if I take a look at this area, which is the 25,369, I'll put a line there so we can all see that. Mark that off. Okay, so we can maybe call this the 70. Then on Bookmap, what I would like to see, again, if this was an A+ setup, which it's not, but what I'd like to see is, what were we talking about, the 70s? Right here. Okay, so the 70s, does it have an area of interest? It's not shaded yet, but as you can see, there's 10 contracts sitting right there on the NQ. And to the top and to the bottom, it's definitely the highest area of, it's also a psychological number. But this would be a scenario where, since it's not A+, it has a lot of things that are working against it. I'm not interested in it, but for practice here, we can start to kind of look at this level and see as price action comes back, as if this level starts to kind of fill in. And then I'll show you guys some areas that are left unbalanced in the market. Now we just left another area right here. We did have a break of structure, but for me to have a real break of structure with impulsiveness, which you're going to see on the 5 or the 15, and this already started to kind of swipe back at some volume, I would want to see a break of structure right down here. But just for shits and giggles, we can map out this area that they left. They've already retapped it. This is exactly what I don't want to see. How does this fit on the volume profile? The 45-day, which I'm putting a little bit less weight on currently, is pretty terrible. The daily volume profile, how does that look? That looks fantastic. You know, I mean, this is a nice move right up. You're going to see a level of resistance. Your stop loss sits at the top of your volume node. You got your protection. You got your meat and bones of the volume sitting behind you, free flowing back down to TP1, TP2. So volume profile right here, looks really nice, really nice. And you can see that the market needed that to then finally continue with this move to the downside. That's the only reason why it goes back and revisits those areas of unbalanced volume, because this original move got stalled out. You obviously had an up candle. Sellers were not in control. What do the sellers need to do to get back in control? Go into the selling volume, balance this out, get some more fuel for the move. And then later on, this might become, I can tell you right now, it's not, just based on this candle, how this candle's forming. If this candle had a straight move to the downside, broke structure right here, then this shaded box, then this shaded box, if I can move it, Jesus. This shaded box would then drop down to here. Granted, it's not that set up right now because you can see that it's having a hard time here. It's needing to balance out, needing to get some fuel. I would want to see a strong reactionary move, break of structure down here. Then I could start looking at this area for my unbalanced volume. Same situation on the ES. So on the ES, we've got an area currently sitting right here. Now, what do I need to see? I need to see at least the minimum of a break of structure right here. But more importantly, I'd probably want to see a break of structure down here. We already have an area here of interest. So this is going to be a magnet for price action. Now on the daily over here, this looks terrible. This is in the low volume area, low fair, the non-value area. That's not what I'm looking for. The low value area of the chart. There's actually no volume sitting down here, so it could be an area that it tests back out. But this doesn't fit very well. It fits okay on the 45. It's actually fitting in a nice little cove right here. So we'll see. We'll map this out. But again, I want to see a minimum of break of structure on this line chart. If I switch back to that. I need to see a break of structure right here. Okay. At least on the, well, this is on the 15 minute. I think we were sitting on the 5 minute if I wasn't mistaken, but, and once we get a break of structure here, then I could start looking at this area. And let me actually bring this down. Let's go down to the 5 minute. Okay, the 5 minute shows a much clearer picture now of what exactly it is that I'm talking about. My 5 minute level, guys, would be right here. Maybe a little higher. Right there. 68.77. Okay, that would be my area. Did this level, before it made the impulse move and broke structure, did this area, was this area balanced out prior to the move? You answer it in the chat. Would this be a high probability 5 minute level for me? Okay, CAD says yes. No, good. So as you guys can see, what happened on the next candle? Did we break structure from this level? Basic 5 minute level. Okay, nothing complicated here. Purely mechanical. From this 5 minute level, did we break structure without rebalancing that exact level? No. The next candle tried to make a push to the downside, came right back up and tapped into this volume to finally make its way pushed down to the downside. If I drop down to the 1 minute, it'll even show it a lot more clear. And this is what you have to do. I mean, it takes some time, it takes some effort, but what did the price action? It tried. It didn't have enough fuel, came right back, tapped into the unbalanced volume. It tried, did not have the move, came right back up, tapped into it 1, 2, 3, 4, 5, 6, 7 times. Okay, so now as the move happens, is this area as strong as it would have been on the 5-minute if we would have had a clear break, no retest of that area? Absolutely not. And that's what you got to find every single day. At the very minimum, and again, you can keep your chart on a line chart. I would maybe even have 2 of them, a 5 and a 15. I don't need the line chart because I see I don't need the line chart because I see break of structure very easily. But for those of you that are maybe getting into this and or just this helps you to see it clear, have a 5 and a 15 and just keep mapping out. You can use a circle, you can use a circle, you can use a square, you can use whatever the hell you want, and just keep actually this was not a break of structure here. So you can see that that move right here did not break this major piece of structure right here. This one did. This little peak right here, that broke major structure. Down here, we had another peak, and not the cleanest. And when you see things that are not clean, it's because price action balanced out that area. It's just a very easy indicator that make things very simple for you. It'll show this. It'll show this sideways movement to break structure below, or I'm looking for V's. I always said it from day one, a year and a half ago when I created my levels. I want to see V shapes in my levels where we had price action going up. A year and a half ago, I had no idea what would make price action come back down and kind of form that V. I always called it a wall in the market, something. I always said I'm not smart enough to know what happened, what made the market come down from that area, but that's where I started to mark out my levels. And now I obviously know that volume is the reason why we were seeing those V shapes in all the markets, in any market that you look at. So we tapped into here. If I take a look at the ES, let's see what the ES has going on. Okay, so the ES left the 68.44, which sits about right here. That could be something that they come right after. That's unbalanced. Again, as we stated, is this an A+ setup? Absolutely not. You know, your volume profile looks like shit here. You're in a low value area. You've got really no price action there. If I look at the 45-day, is this volume bigger or smaller than this big chunk of volume? Well, this chunk of volume is much stronger than where we currently are sitting at. So these are going to be low probability areas. Now this shaded box, I got to see where this even came from because I've been drawing out so many boxes. But just looking at it on the daily, it looks like shit. We don't have any volume. I have no data here, so I'm blind. I got to go to the 45-day, a mixture of December and March. There's a lot of volume sitting right here. So this automatically is going to have a little bit more weight. Now, if I take a look at price action from where this thing even occurred, I don't know why I deleted that. I don't even know why I moved that. Let's see if I can. I don't even know if this is going to be on my chart. Yeah, no, this is not even on the 45. It's not even on the 45 days ago. So I'll kind of go in blind and rely on what I see on my right-hand chart. Okay. 12. Okay, yeah, so this is actually this one here has got a very nice break of structure. Granted, we would be using December's contracts volume to decide that, which has been a little shaky lately. So that's why, again, you don't see the signal coming up on the signal service. You don't see me putting my lines here to take a trade here. And that would have been okay. Still wouldn't have tapped in my stop loss, but would have been really damn close. But it wants to come after the 44s. That's the easiest place for it to do. It's the easiest place for it to make its business. Be right back. Let's watch price action here. See that? What do we tap right into? It's very simple. In my eyes. I know for you guys it's not very simple. Trust me, I completely understand that. And that's why I think the Masterclass will help out tremendously with a lot of concepts that are going to be on here. Specifically and especially TP1s and TP2s. Stop losses are extremely important to me. This would have been a little... granted, this was a B- maybe setup. You know, this would have been very close to my stop loss, but would not have been stopped out there. And again, this risk here, I can't believe is more than 4 points, maybe 5 points. Let's see. Oops, 4 points. 4 points of risk there. And where I targeted, I don't know why I deleted the line. Do you guys remember where it was? Was it the 45s or the 47s? I had to say that would have been at least 7 points of profit there from where I had the unbalanced volume area, but I can't remember now where I had that at. That's fine. And we just did the initial balance, but I was caught on the other chart here. Let's just see what happened there. Okay. Well, the nice thing about the initial balance right now is, or no, it was, oh, this already got tapped. So this area right here did hold, yeah, it was a really nice reversal off of this area right here that I had mapped out. I don't necessarily know on this particular candle sequence. Oh, I could tell you. So on this particular candle sequence would have sucked. I mean, you would have gotten $8 points. I guess not sucked, but I'm pretty close with TP1 there scenario. But this one right here, as you guys can see, this area that I had mapped out, look at that reversal. I mean, look at that shift. Granted, not very pretty on the volume profile, not very pretty here, so I would not have categorized this as a setup, as an A+ setup for me, but you can see where the reaction happened from. And we just keep doing it. And you just got to keep doing it. I could delete these two. And I could tell you right now, very simply, that they left another thing here. Did they break structure yet? No. There's been no structure break-in yet. We're getting close to it. Some people can consider this a break of structure right here. But I would at least need to see a break of structure at the 305s for me then to really start to even consider this, even though now it's sitting in a nicer picture of volume. But you got IB low here, so you're always going to have liquidity sitting down here. You always got the possibility of a sweep down here. That's the only issues that you run down there. So here I would be interested in a test of this IB low, which for me is sitting at the 25,178.75. Hopefully there's no IB drama like there was yesterday with I think 3 different IB's values. I suspect that some people might have been on wrong contracts or something. I shouldn't suspect anything, but my IB yesterday I believe was correct, but and for the IB guys, pretty simple. So what's the IB at? 25,178. Come up to bookmap. Let's blow this up a little bit. I kind of need to have this. Let's see if I can get this a little bit more granularized here. Okay, so IB is sitting pretty much right above this 25,175. Any price action to come back down, so I can kind of expand this chart a little bit. But you know, are you seeing interest here? Higher than, more than above, and more than below? Sure. 10, 14. You've got the average of 7, 3, 8, 7, 6. So yes, it's starting to form. Now on the IB, typically, again, you'd like to see a very dark blue, very dark red. And what you don't want to see is you don't want to see another area sitting 15 to 20 points above or below your area of the initial balance. Because what does the market love to do? It loves to tap into areas of high liquidity, make that big wick, tap it, and then make its real move. If you don't see anything above it, and you know, like the next area is 40, 50 points above, they're going to want to do intermediate auctions before they go after that. They've got enough juicy volume to play with at the IB high or low, that you can get that reaction. And that's what kind of gives me the conviction. Sometimes you guys have seen me just do a resting limit order. That's when I have super strong conviction where I got nothing really above it that's going to be a target or a magnet for it. Another great scenario for footprint confirmation would be, let's just say the IB, I'm just hypothetical here, IB is at the 287, okay, right here. As you guys can see, volume is starting to stack up there. If I see volume, a big pocket stacking up maybe 5 points above the IB, that's where a footprint confirmation is going to be fantastic, because it'll tap into IB, maybe make a little stretch, that 4 or 5 point stretch to the secondary pocket of unbalanced volume. And then we get a footprint confirmation. That's a beautiful trade. So those are the... those are how I use level 2 on my IB strategy. Now it's a little hard for me to keep putting Bookmap up back up on the screen, because currently Bookmap is now taking up my real estate on a very important chart for me. And I can't leave it on this main screen here, because then I got to be flipping through it. I can't see price action. It's just a mess. So that's why I've got Bookmap completely on a separate system with a monitor that's hanging up there. I've even forgotten what was this here now. I'm talking so much. Oh, this was an area that I spotted where we could possibly see a reaction. But at this point, I would be more interested in the IB low setup if possible. I do not look at FVGs at all. Fair value gaps have nothing to do with my strategy. In fact, what you're going to always find in the relevance to fair value gaps to what I am looking at in the really grand scheme of things is similar. The only similarity is that fair value gaps are an area within the gap that have very little volume, but had an impulsive move. So that impulsive move, when you look at it on the way I look at it, typically for it to be an A+ setup, I need to have, and this is going to be terms that I hate using, but people understand them. You get your displacement, your break of structure. They typically will form a fair value gap because that's the nature of the movement from it. And if fair value gaps help you to see that, what gets balanced and what doesn't get balanced, use fair value gaps. But I guarantee you start using fair value gaps, you're going to be drawing fair value gaps everywhere. And then you're going to always come into, you're going to always have the issue of which fair value gap do I trade from? Then do I start trading inverse fair value gaps? I could say that the closest thing would probably be order blocks, because order blocks are going to originate typically from areas like kind of what I'm describing. The way that they map out an order block is very different than how I see it with volume. And people will trade order blocks and fair value gaps completely blind. If you don't incorporate volume, I don't even know why you're watching the channel, because that's the key to trading. And for the traders that trade fair value gaps with volume, they're pretty much trading very similar to my strategy, and they've figured out that volume gives them the edge. The top traders that you watch on YouTube, the ones that are always winning these Robin Cups and World Championship, every single time they come on a podcast or anytime that they're doing a video, volume profiles on there and order book is on there. Those are the necessities, and footprint, the footprint candles. Those are the necessities that you need to trade. That's it. You don't need anything else. But trading fair value gaps on its own is it's maddening to me, because what fair value gap do you choose? And then do you always get the reaction point of fair value gap? No. Sometimes it has to tap in above the fair value gap to get the reaction. It's better to start from the levels and work your way down from there. Glad to hear it, DA. Nordic, today's IBL matches for me. Yeah. Okay, cool. Okay, what I will do is, let's see if I can, I don't know. The second that I click on my chart, the bookmap's going to go away anyways, so. But let's see, the 178. Now, are you starting to see volume stack up there? You sure as shit are. You see volume stacking up there. You've got a small little area at the 162 that they're coming at. So this looks like a very interesting. Now, this is a natural stop loss area as well. Typically, the IB low always is going to be, because it's a pivot. And there's always going to be stop losses sitting here. So that's why sometimes you get that swipe. What you'd like to see is some defense coming in right under the 178s, which is, so the 178s is sitting, let's see if I can get this without losing the chart here. Okay, like the 180s are not as strong. Let's see if I can fix this up a little bit. This would be around the 170s. So that's about a 5 to 7 points where there's going to be interest below you, which is great. I don't see anything that's super nasty. And I don't see this that you see up here. I don't see it underneath the IB low. So again, looks healthy. The IB low looks healthy today. Might want to... This did not break structure, so just drawing this out for educational purposes. But this area here did not break structure, so this is not an area of high interest to me. But that would be an area that where we could see a reaction point at. Again, not a lot of things working for it, so this is why this would be considered right now like a C- setup. No break of structure here. Volume profile looks like shit on both sides, the 45-day and the daily. You know, the only thing really it's got going for it is it's just a small little pocket of unbalanced volume. Could be fuel for the move to the downside. I don't know yet. And based on where Bookmap was at, oh, sorry. Based on where Bookmap was at, what are they looking at? The 326s. So the 326 is all the way up here. We can mark that off. That's a big area for them. Let's put a circle guy here. And we wait. We'll see kind of if we do get a reaction there or not. So far, not. You see how when I mark them off as C, C- setups, they don't got really anything going for them. They don't get respected. IB high sitting at the 25,409. Now this area where I mapped out was an area of unbalanced volume. So, or break of structure at least at this point. So now let me see if we can find anything that coincides nicely. Well, I should, yeah. I understand what they're coming after right here. But dicey. Super dicey here. So we could get a big reactionary point here at the 326 just based on order book. Right here. But my TP on that scenario would be probably around there. Stop loss would have to go up here. TP2 would be smackaroony right around here. Delete. I'll leave the shaded area up. See what happens here. TP1 is very, very flimsy. You can see exactly how it fits on the volume profile. TP2 is a stretch, but big area of interest right here. See what happens. Golden level. Which one is the golden level? The 326? Forgot who sent me a trading strategy, I don't know, maybe about a year and a half ago. And that golden level, I remember talking about golden levels. Maybe is that the 326 golden level? Looks, yeah, it's got things working for it, for sure. Would I be targeting, 20 points on that trade? Probably not. But could also freaking blow right through it, but all the 26s. Oh, okay. Yeah, I remember reading up on the strategy and I mean, to me, I'll keep my thoughts to myself, but I'm sure people can make it work. Let's take a look at the ES real quick. We're coming in hot there. Ah. Dang. I wasn't even looking at the ES for a while. But that's where the reactionary point that I saw would have been at right here. That's exactly where I would have. This is exactly where I would have popped it. It fits nicely on the 45-day. It fits on the daily, not like super satisfying, but that is an area. Let's watch the ES. Yeah, and DA, you know, thank you for the comment. Great stuff, Rob. I don't trade like you, but it's always something to learn from another. Even if there's one or two different aspects that you can grasp from, you know, if you've got a built-in strategy already that's got a decent edge, got good win rate, you know, good P&L curve, and you've got a good handle on the market, that's fantastic. And then what you could do is, instead of blowing up your strategy and starting from, you know, something else that some YouTube guy is telling you on the video or on stream, incorporate small little aspects of volume, and you could do that very simply with the footprint confirmation. You know, you can take the footprint confirmation and use the footprint confirmation to confirm the entries on your particular setup. For instance, the golden setup that Scott's talking about at the 26s, which coincides with a pretty strong area on the NQ right now, the 326. We'll keep the footprint chart here as we get close to that price action, and we'll see if you get the confirmation there, and then maybe yes, then you can incorporate small little things from volume-based strategies into your current setup, so you don't have to necessarily blow up what you're currently doing, especially if it's working. If it's not working, then you know you can always revisit other ideas. Let me go over my schedule. I don't know if it's tomorrow. Oh, that has to go down here. I believe it's Thursday. Thursday's going to be an early start. Yeah, Thursday is going to be an early start. So I'm going to be on the chart. I'm going to be on stream by 7:30 a.m. on Thursday. And we'll go right up until almost IB, about 9:30, so 2 hours. So Scott, just because I'm always trying to I love listening to stuff like this. So on that golden level with the 26s, how does that incorporate into like the ES? I mean, I see it easily incorporated onto the NQ because you've got the 26 at every 10, pretty much every 10 paces or points. But on the ES, is it still the same thing? You go to the 26s, because I would think that on the ES you might not see a trade for a couple of days, or is there some kind of variation to that 26 rule on the ES or other markets, or does it just work on the NQ? Is it just an NQ setup? Because the ES, this area right here, kind of coincides. We'll probably be visiting this NQ almost at the same time. But this is sitting at the 60s to the 64s, so I don't know if there's a way to, how do you ratio that out onto the NQ? Not too sure. I don't know which one to look at. Should I look at the NQ or the ES? I think the ES kind of already might have played its role right there, kind of balanced stuff out there, but we'll switch over here to the ES footprint chart. Kind of see they did leave a nice little pocket below at the 50s. So right here they left this unbalanced. That could be something to target. So they just tapped. Good footprint confirmation right there at the 36s. So missed that area by less than a tick, so we'll see. But again, it kind of already balanced it out here a little bit, so this would probably be an invalidated setup. All right, let's look at the NQ. I think the NQ is getting pretty close here. Let's switch over to the NQ footprint. All right, there was the tap. Let's see if you get a footprint confirmation here. No. No footprint confirmation yet. There you go. Went right through that sucker. Went right through that sucker. So the footprint confirmation came pretty late in the game, right up here. I guess a point underneath where you were at, underneath the stop, where my natural stop loss would have been, but that definitely nowhere near the reaction that I would want to see on that particular trade. So that saved us. Saved us pretty well. All right, so we got this next level here that we had mapped out earlier at the 25,369. Let's see what Bookmap's doing there. Okay, not much yet. Not much interest. I believe that this was, I rated this like a B minus setup. Let's look at the ES. ES finally got into this area here. Granted, they do have the 50s. This should be rating 50. They do have the 50s that they left unbalanced, so very easily could see a swipe of the 50s from here. Especially now that you're seeing the, if I go up to the ES footprint, let's see if there was anything there juicy. Probably see some level of resistance right here at the 55s. So it looks to me like they're going to come after the 50s. Like I said, today's more of a confirmation day for me, just to make sure that these levels that I'm mapping out, they hold some respect and they continue to work with the correlation of the differences in the two contracts. So again, daily on the left-hand side, which is March contract. The right 45-day composite is incorporating a lot of the December contracts volume. And we're starting to see a lot more respection of the areas that I am mapping out. This probably would have ended up being a pretty decent trade there. But we'll see. Let's see what the NQ is up to. Okay. And now we've got an area, what looks unbalanced to me right off the, I mean, I don't even need to, I don't need to look at the line charts. I don't need to look at anything. Obviously this area right here is sitting with unbalanced volume. Very simple. Pop that up on your chart. Lower time frame. Let's see where we get a reaction from. The reaction sat right here. That was kind of the origination. Not the greatest either. Not the greatest, not the worst, but not the greatest. If that makes any sense. We kind of have a little pocket right here too that would look very interesting. I mean, shit, you can make a case for... This is a tough one. No, that balanced out before it left. There's your case right there. Those are two areas right here. And I mean, a trading strategy alone, if I switch this to the NQ footprint, trading strategy alone is just finding these little areas, wait for your footprint confirmation, take a good footprint confirmation, maybe increase the range on the footprint confirmation to like a 40 range, 10 points instead of the 5-point range that we're currently looking at. And those will help you spot bigger moves to the upside. So what does it want to attack? Does it want to attack the IB high or the IB low? I don't know. Not really sure. So what you're seeing on the charts today is very different than what I put out on my charts every single day. Always my charts are going to have entry, stop loss, take profit 1, take profit 2. We're all accustomed to that. Yesterday and today's, obviously on stream, I didn't take a trade yesterday. I did not take a trade so far yet today. Not to say they can't change, at least not on stream yesterday. These are more confirmation areas for me to make sure that I am reading the correlation of March's contract with December's contract. So December's contract's my guide, which is right here on the right-hand side. And then my daily, which is today's price action on the March contract, is giving me a clear picture of the details of the March contract as well. So I just want to kind of go back in time here and see where this came from. Okay, I see it. I see it. So this would be, let's just map this out here real quick. Oh, but yeah, this one, this was the example that I gave you guys of this guy right here that kind of swept. I think it was shown, I could show it better to you on the 5-minute. Yeah, it was this guy right here. This little bastard. This little bastard is the one that kind of made this like go from A+ setup in my normal book to B- at best, was this swipe right here. But still gives me something to look at, something to see on confirmation of what works, what doesn't work, what's being respected, what's not being respected. Oh, we would have had a nice little winner. And on a normal day, this would have been a nice little winner here for me. This setup right there. Not sure what this would have gone for. Maybe 5 points, 4 points, 7 points. Even though we did have the swipe right there, that would have given you a lot more, maybe 14. But this right here would have probably invalidated my setup anyways on this particular trade. 7 points would have been fantastic, especially on about 3.5 points of risk. I'll take it all day long. All day long. All right, let's see what the market wants to do. I'll be cutting off, guys, in probably the next 10-15 minutes. I got to get to a village to purchase a transfer stamp for a closing I got tomorrow. Tomorrow's payday. Looks like Top Step X is having some issues. We are aware of an issue impacting all traders. Check status. Last day today for Apex's 90% off sale. If you do get any evaluations, the only thing I asked for is just type in my code, Trader Rob. I know you could use anybody's code, but hopefully you guys are getting some value off the streams. We've got our next members only live stream this Thursday at 7 p.m. Central Time. So come ready with your questions. We'll go over the strategies. We can go over a lot of the ideas that we talked about here today. And again, that'll be Thursday at 7 p.m. Central Time. So I'll have my cocktail ready, and you guys have your questions ready, or whatever you want to talk about. You know you want to tap into the 6850s. Just do it, buddy. Do it. Do it. You know you want to. You know you need to. How does the high be? Oh, good. Let's take a look at that. I'm mesmerized by this EFs trade that I'm looking at right here that I did not take, but I just really want to see it take out the 50s. Just gives me another little confirmation. But all right, let's go take a look at the IB high. So the IB high 25,409. Let's see first of all where that is sitting at in relation to. Oh, that's going to be a big stop run right there. Almost got a triple top up there on the higher time frame. This is dicey. This one's got a shit ton of stops, so we are going to see order book's going to have to be pretty loaded up. 409. Let me just see. 409 is sitting. Yeah. This could be pretty big reaction point here. I don't know if Bookmap. Let's see. 409. So 27 contracts, 18. This is probably going to start to increase right up here in this little slot right here. I much prefer having my Bookmap up on my big screen because I get the whole thing blown up and I can see these price volumes a little bit more granular than I can on this monitor that I'm currently at. So right now it's a big stop loss area. I got to see as we get to price action. Currently the 450s is an area that they're looking at. But again, that would put me way above an area that I would feel very worried about for a possible sweep. To me, a tap into IB high, especially with the absolute shit ton of stops that are going to be sitting up here, I might be able to get enough reaction where my 15-point buffer would be fit in line, and possibly a pretty strong move to the downside. But again, I'll monitor that as we get closer to it. Oh, and the ES finally did its thing. There you go, tapped right into it. That would have been a nice trade. That would have been a good 10-pointer right there. Good. This is what I want to see. I want to see confirmation of the stuff that I'm looking at. I want to make sure that I'm reading the markets right, and that hopefully we can have a strong end of December and go into the new year with some positive signs. I gotta say, this is probably the funnest day I've had on stream in a long time, and I haven't even taken a trade. I'll be right back. AP, for my footprint chart, it's set to a 4 range, so pretty much equivalent to a point. And I'm on the 1 minute. I'm currently on the 5 minute right now, but typically I'm on the 1 minute. I'm on the 1 minute primarily for your viewing monitor. What I actually show on screen. What I have, to the sides of me is pretty robust, but I've got multiple time frames. I've got the on the ES, I'm down to the 30-second, the 1 minute, the 5 minute, and the 15 minute. So I have those 4 charts up. On the NQ, I'm on the 10-second, the 30-second, the 1 minute, and the 5 minute, because those are the you could almost take out the 5 minute, but the 10-second, the 30-second, and the 1 minute I have on the screen for the NQ, and that is to find my TP levels. Very straightforward on that. On my confirmations for the NQ footprint, that sits at a 20 range chart. So equivalent to about 5 points. Not about 5, exactly 5. But what you see here on the 1 minute, that's just to make the tray so you guys can see the setups and see where my entries are at and all that. I'm not necessarily trading. I'm entering in trades from here, but everything is pretty much derived from the multitude of, I was going to say shit that I got going on, but it's not shit. It's good stuff. All right, so we got a very nice reaction. Again, what I like to see, we got a very nice reaction on the initial tap right here. That was good for about 17, 18 points. We got a reaction at the secondary level that I mapped out right there. All these are very, very, very positive signs of what I want to see in volume. So this tap here was 0 drawdown. This here obviously took a little bit of drawdown, probably about 6 points, but we got the reaction which is what I needed to see. And the more and more we do that, the more and more these things come true, which last couple days have been a little bit more difficult, the clearer things start to become. And I will say, you know, even though I didn't take a trade here this morning, the movement's been great. You can see that the movement has been very good as far as what I'm looking for with volume. Well, the ES would have given you a lot more, huh? We're at the 50s was my target for unbalanced volume. That would almost given you 15 points already. So for those of you watching in my signal service, be patient. You will start to see signals be coming back, broadcasting on the signal service page on my Discord. You know, I need to see this. I need to see some successful areas of unbalanced volume starting to work out, and I could then start mapping out some really nice A+ setups once again. So just stay patient. I know it's a hard thing to do as a trader. One of the hardest. Yeah, so the ES moves, you got to have a shit ton of patience for the ES, which I do. I actually like the movement of the ES. I like the movement of the NQ as well. I mean, you know instantly on the NQ if your setup is right or wrong. It's the way I look at it. The way I trade, I know very, very quickly. On the ES, it'll make you sweat to know if your setup is golden. Nice little dump here, huh? Nice little dump. Let's see what's going on at the 178s. Okay, so the 80s are coming in, but not super strong yet. Let's see what kind of reaction we get here. I don't even know which level this was that I had mapped out already, but I'm assuming I had it on the charts for a reason. There you go. Nice little reaction. That's what we want to see. That's exactly what we want to see, guys. You know, three points of drawdown, maybe 4, maybe 3. 3 points of drawdown. Nice reaction. Get your 15, 20 points and get out. It's exactly what we want to see. I actually think I could have made some pretty good money today, but I'm okay. I got to show the patience too sometimes. All right, guys, I hate to leave you without a trade, but I got to run off to a village. I got to close it tomorrow. I got to pick up a transfer stamp, and it's about 45 minutes away from me. It's probably not going to be an hour and 15 with traffic. stay patient, guys. The setups will come. The A+ setups will be there. I promise you. You guys are starting to see some really good reactions today. Hopefully you guys got some value off the stream. This will be obviously posted right after we end the stream. So if anybody wants to rewatch it, I think there's a bunch of nuggets in there that you will like. But before you leave me, please just hit the like button on the stream. If you haven't subscribed to the channel, I don't know what you're doing, but and if you're looking to get any evaluations or funded accounts, just use code TraderRob. I truly appreciate it. It's a small gratitude of appreciation that I get from that. So that is very welcomed. And take care. I will see you tomorrow at 8 a.m. So about half an hour before the market opens. I do like this format of a little bit before the market opens because it kind of coincides to right after I give out all my levels on my Discord. So it gives us about a 30-minute jump start on the market. And I don't feel rushed right at the market to find, you know, some early setups that might be coming. So with that, I hope you guys have a fantastic day. Stay patient. Stay in the green, and I'll see you guys tomorrow at 8:30. Take care, everybody.